Hi, everyone. It's Josh Rubin here with Douglas Elliman in New York at the Rubin Special, and I'm joined by none other than my good friend, Howard M. Lorber, Executive Chairman of Douglas Elliman. Howard, thanks so much for joining us today.
My pleasure. Thanks for inviting me.
Absolutely. So, Howard, you're in such a unique position in that you're overseeing all of Douglas Elliman, which, of course, is multi-regional from Boston down to Florida, out through Aspen, down to Houston, and then to Los Angeles. So we're in a fairly unique place in the world in terms of the virus, the economy. What are you seeing out there?
Well, obviously, things have come to pretty much of a standstill. We are still doing deals, harder to do, but probably California and Florida are a little bit more active than New York. New York, with the no showing rules really sort of prohibit deals. We have done some deals. Most of the ones we've done have been in New York, have been new development deals.
Huh.
And when people are surprised, like maybe you are, Josh, and the only thing I could say is, I think people remember the days when new developments, you were buying off of floor plans. So what is there to see anyway? So we've done some pretty good deals there.
Yeah, that's a good point. I remember a long, long time ago when Rockrose was one of the first developers to sell out of the ground. Just their buildings were just a hole. We were selling off of floor plans over at 99 Jane Street, and that was a great success. So we're just going back to that. I've spoken to a couple of developers as well who have told me that they've had some success with virtual showings. What are the ranges of deals that you're seeing as far as the new development end of the spectrum is concerned, just in the last few weeks?
Price wise?
Yeah.
Yeah. Well, the biggest one was I think 11.8 million.
Wow.
Which was at 108 Leonard, the project downtown.
Yeah.
Great project.
Yep.
That started and finished. Went to contract about 2 weeks ago.
Huh.
It started after the pandemic started, so that was a good one. The rest of them are smaller, a few smaller ones, but there's some $3, $4, $5, $6 million deals.
Sure.
That have happened.
Yeah. Well, look, any deal's a good deal in this market. I know my team just got an accepted offer the other day on a townhouse in Murray Hill for $5.9 million.
That's great.
So things are happening, and in the course of doing this show, Howard, the Rubin Special, I'm speaking to other top producers in various markets. Of course, yesterday we spoke to our friend Sonata Zem down in Miami. There is demand in these markets. And so if anything, that gives me confidence to know that once the stay-at-home order is lifted, that we're actually going to see pretty significant demand in the city.
Yeah, I agree. Look, the city's the city. People could talk it down right now, whatever. And, these comments, everyone's leaving the city. Well, people may be leaving, but plenty of them will be back. And I believe very, very strongly in New York City. And, it's interesting because you have two parts of the market there. You have the new development and you have the resale business. The resale business, I think, is going to come out of the box being pretty strong because people haven't been able to do anything. And the people that look at the data say, oh, well, listings are down. Well, of course, listings are down because a lot of times the brokers are saying to them, there's no reason to list now. Let's wait until we get closer to an opening. Then we can list. So there'll be more listings coming on. We'll probably end up with more listings than anyone thought. Okay. And I think there's a lot of demand. And of course, the buyers are going to be, it's going to be interesting to see. They're going to look for bargains. And I think, as we've always found, there aren't really any great bargains. But I think fair prices will get deals done. And I think we'll see a lot of action on that side of it. New development may be a little slower, but that'll catch up also.
Yeah, I mean, look, new development has been out there, so it's not that new development product is all of a sudden going to be coming available that wasn't available before, right? We're seeing new development projects that were online, before the stay-at-home order was put in place. Those have remained on the market throughout the time that we've been away, and they'll be available when we come back. Is there going to be any renewed interest in those new developments? Probably not, but I do think that developers will be more motivated and certainly more receptive to creative offers that they might have not otherwise been earlier in the year.
Yeah, I mean, look, there may be a few new developments, and those may get some activity. But you're right, the new developments that have been around, a lot of people know about it. So unless it's someone new that decides they want to move to New York City or want to move to a different area of New York City, you're not going to have the same demand on resales. A lot of new things are going to come on the market,
Yeah.
and the market had picked up. If you, as you remember, I'm sure, Josh, we were talking about it the other day. After the new year, January, February, March, going into March, were pretty strong. And
Yeah.
then all of a sudden, middle of March, that all stopped with the pandemic.
Right. Things changed. I mean, I'm comparing this process that we're going through and this experience to being a little like musical chairs in the dark, right? I
Yeah,
mean, we
yeah,
knew how many chairs there were, but then the music stopped, and not only did the music stop, but the lights went off. And so when the lights come back on, we don't really know who's going to be where and how many chairs we're going to have. But
that's right.
I do know one thing, and that is that a lot of people were on the sidelines for the last couple of years, sort of watching the market. They didn't want to jump into what they were describing as a falling knife already. I don't think it was quite as bad as people were painting it. However, there were a lot of buyers on the sidelines, and this is their opportunity to get back in the water.
Yeah, no question about it. Look, it may take a little time, although I do think there'll be a surge right in the beginning. But I've always felt that, especially Americans, they seem to have very short memories of bad events. And
Right.
we could go back to the financial crisis. We can go back to the crisis in the 80s. We can go back to 9/11. And they all came back. I mean, even people that said, "Oh, I'm moving out of the city." Well, I know a few people that moved out of the city full time and went to the Hamptons. And I think of the four I knew, three came back within 2 years. So there'll be different people thinking different ways, but I'm bullish. I think you have to be bullish. I think the economy will come back. The economy comes back. People will start coming back into the market. And look, what better time? You're going to have somewhat lower prices, and you're going to have lowest interest rates we've ever seen, that any of us have ever seen in our lifetimes. So, I mean, that makes for a pretty compelling reason to buy real estate. And now they're talking also, well, with all the money being pumped in, you're going to have inflation. Well, here's the good news about that. Inflation happens to be by itself good news for real estate, because that's an asset that will appreciate during inflationary periods.
That's right. We have gold on one hand, and then we have real estate on the other. These are both fixed assets that people tend to gravitate toward in uncertain times. And yes, we're having our share of uncertainty, but due to the historically large stimulus that the Fed put in, by the way, in record time, because don't forget that they had the roadmap from the financial crisis in
Right.
2008. Lehman Brothers failed on or about September 17th of 2008. And then it was, a few months before people really understood the ramifications of it. And then it took them a few more months to figure out how they were going to fix it. So it was really January, February of 2009 before Hank Paulson actually put the whole federal stimulus package together. And it wasn't until about March 9th of 2009 that the equity markets finally bottomed. So what we had there is September to March. That's about 6 months of uncertainty with financial markets just cascading downward. And then finally, we saw this bounce. And from that point forward, New York City was the city that led the entire country out of the financial crisis in terms of rebuilding its confidence. We saw values on properties, continue the momentum upward. And as soon as early 2010, I was doing deals at or above those pre-Lehman prices.
Sure. And if you remember, even in other parts of the country, I remember them saying, I guess it was 09, that there's a 10-year supply of unsold condos in Miami. Well, the 10-year supply of unsold condos in Miami was gone in 15 months. So there may have been a 10-year supply, but there was also a big group of people waiting to scoop up bargains, which is what they did. And I agree with you also. I mean, the fact is, this pandemic itself is new to us, okay, and it's a horrible, horrible event. But on the other hand, the government and the people are sort of experienced already from the last crises as to what's going to happen,
Right.
okay? And it's only a matter of how quick it happens. There's no question that it is going to happen. And in a time of a booming economy, I mean, it's gonna have a better shot of coming back quickly.
Absolutely. So Howard, you've built Douglas Elliman into an incredible company. It was a strong company when you took it over from Insignia, but you've built it into an absolute powerhouse today. When you took it over, can you tell us a little bit about how it came to you as an opportunity and how you built it into the company that it is today?
Sure. So I had a friend of mine, a lawyer, who was representing a company at the time called Prudential Long Island Realty. And it was a Prudential franchise in Long Island. And there were two partners that owned it. And they had offices in Nassau County, Suffolk County, and a couple in the Hamptons. And the lawyer called me to tell me that the company was floundering and that it needed some money and it could be a good business opportunity. So I met the partners. First one I met was Dottie Herman, and she was fantastic. And she had told me what she thought the issues were. And it was pretty easy to figure out after listening to her that the real issue was the partnership with the other partner. And then I met him, and then I was sure that that was the real problem. So we made a deal to put some money in. Wasn't a lot of money, but put some money in. And I told the other partner that he could still be on the payroll, but we don't want him to come into the office because it was just disruptive. And he agreed. And that worked for about 2 weeks or 3 weeks until he was bored. And I think sometimes, having been through this pandemic now for 6, 7 weeks, and we're sort of dealing with it, not happily, but boy, he couldn't deal with it for 2 weeks. So just not coming into the office. So
Great partner.
Who knows where he is today? But
Yeah.
in any event, we basically said, well, then we can't pay you anymore. And then, of course, the money was more important. So we made an overall deal, took him out. And then Dottie and I ended up owning 100% of Prudential Douglas Elliman. Prudential Long Island Realty. Then at one point, after she did a great job of turning it around, we were making money. In fact, we got an offer to sell it to, in those days, it was Ascendant, now known as Realogy. And it was a good sum of money. It didn't mean much to me. I would have gone either way, and I told that to Dottie. But I said to Dottie, Dottie, you've never had financial security based on her life up to that point. And, I think you should do it, but I'll do whatever you want to do. And I knew what the answer was in advance. Like I said, take some time. She called me the next morning. I'm not selling it. And I said, I'm not surprised. Okay. And that's what I expected. So let's move forward. And that sort of put us in the thinking of what can we do that'll be more exciting, more interesting to expand the business. And we had taken over a small office in the city, and that was it. We really weren't in the city. We didn't even talk about the office too much. The one little one we had in the city, it was downtown. And then I had heard that Insignia, which owned two companies, it owned Douglas Elliman and it owned it owned Edward S. Gordon, which was an old commercial firm.
Okay.
So they decided to liquidate the company. It was a public company. The stock wasn't doing well, which is problems a lot of times for brokerage companies, residential and commercial, because they're cyclical businesses and investors, you're a good investor, Josh. Investors don't like cyclical businesses. They like businesses that have a constant earnings growth. Okay.
Right.
So I was sure that they were going to sell both of them to liquidate. And I was pretty sure that they'd be able to sell Edward Gordon pretty easy. And I thought that, but I thought the people that I had heard may buy Edward Gordon, I know didn't want to go into the residential business. So I called up, the person in charge at the time. He told me he's not interested in selling. And then I forgot about it. And then about a month or 2 months later, and going into my office in the building I'm at in the city, I ran into him entering the elevator at the same time. And he got off, I think it was the 32nd floor. I got off at the 52nd floor. And as soon as I got to my office, I called up the front desk downstairs and I said, who is the tenant on the 32nd floor? And they told me it was a private equity company. And I remembered that this particular private equity company owned C.B. Richard Ellis, or controlled C.B. Richard Ellis at the time. So I said, they're going to be interested. They're going to buy the Gordon Company, merge it into C.B. Richard Ellis. but I don't believe they have any interest in the residential business. So I called the person who was running the companies at the time, and I left him. I knew he wasn't there because I know he was downstairs in the building. So I left a message. I said to him, Andrew, it's Howard Lorber. I know what you told me before, but I know you're going. I know where you went. I know who you're going to see, and I'm sure they're going to want to buy the commercial business and not want the residential business. Please call me back. Sure enough, late that day, he called me back, and we had a pretty good talk. And he told me that he had already entered into a contract, or was about to enter into a contract with another company. But the only thing that bothered him about that deal was because the other company was already in the business with a lot of offices and good market share in New York City, they would have to go through the Federal Trade Commission to get approval to make sure it wasn't anti-competitive. And that may have meant they would have had to close some offices. It was more complicated. It would take time. So I said to him, I said, look, whatever you were going to sell it for, I'll pay the same price. We're not in the city. We have one teeny office, truly not anti-competitive. And let's send me a contract and let's get the deal done. And sure enough, within a few weeks, we did the deal. So that's how it happened.
There you go. So it was a little bit of being in the right place at the right time, thinking on your feet, and recognizing opportunity when it struck you.
Absolutely. I knew that Douglas Elliman had a good name. Douglas Elliman was sort of up and down. I think the problem there was they were through 3 different ownership changes over a relatively short period of time. And, stability in a company ownership is important. So I thought that it could be a good deal. And it also had something that in my business career, I've always looked for companies that had great brand names. It's very hard to kill a company with a great brand name, no matter how bad the management is. So I didn't know that much about the management, that the current owner was with Douglas Elliman, but I knew some of the priors, and I wasn't sure that they were very good management. And the stories I was hearing, and the facts of life were, our biggest competitor was Corcoran, and they were growing and growing and growing, and Douglas Elliman was sort of stagnant. So I had a feeling that this was one of those companies that is sort of perfect to buy, a company with a great brand name and management that I can improve on.
Yeah.
And, and I used to say to myself, if it's a great company with great management, how can I make it better? What am I going to be able to do for it? There's only so much you can do. So Douglas Elliman fit perfectly into what I look for.
Into your portfolio.
Yes.
Yeah. And can you tell us a little bit more about your experience leading up to Douglas Elliman? I mean, I know you both personally and professionally, but
Sure.
some of the people watching might not know some of the background. So what led you up to that moment where somebody who knew you and your experience said, "Hey, I have this opportunity on Long Island"? How did you get to that place?
Okay. Well, I'll start quickly. I'll give you a little background. I
Sure.
was born in the Bronx when I was about 8 years old. We moved. My family moved to New Jersey, Paramus, New Jersey. Nice suburban community. Basically, it was all farmland at the time. There weren't these big shopping centers like there are today that Paramus is known for. And that was around 1955. Bought a little track house, and my father went into business. He tried getting a few jobs. He was an electrician, electrical background by training. So he opened up his own little electrical contracting company, which was good timing because the housing boom started in northern New Jersey during that period of time. So I went to public schools, and was a very mediocre student. I used to say bad, but I give it mediocre. And now it's time to go to college, and I'm like, okay, now what do I do? I was not, like I said, not a great student, not a very good student. And I asked
and
around.
You went to CW Post?
Yeah, but I applied to a couple of other ones.
Uh-huh.
The safe school there was a college in Kansas called College of Emporia, which I did get into, but I didn't want to go to Kansas. And then everyone said, well, you live in New Jersey, you'll definitely get into Fairleigh Dickinson. But guess what? I got rejected. My mother used to make fun of me. She said I was the only kid from Paramus that got rejected from Fairleigh Dickinson. So lo and behold, a friend of the family who was an educator and was a teacher mentioned this school in Long Island, CW Post College. And I applied. and they had a special program where if you were borderline whether they were going to take you or not, even though it was a fairly not difficult school to get into, to say the least, but still they had this program. If you were below what they wanted, you would come to school starting in summer, right after you finished high school, and you would take, there would be like 2 semesters, July and August, and you would take 2 courses in July and 2 courses in August. And so went there, moved into the dorms, took the courses. I think it was 2 history courses and 2 English courses. And it gave me, it was interesting because I guess maybe it was easier because I only had 2 courses each month. And anyone that was there, it was a smaller group. It wasn't everyone from, the school. And I made friends and I was happy. And it was close to home. I could go home if I wanted to, but I liked living in the dorms. And it gave me, starting as a real freshman in September, I already had 12 credits. So I was sort of ahead of everyone else. So it gave me the sort of enthusiasm to move forward and to try to make it work. And I wanted to be an electrical engineer. And they had a program at Post at the time, and then they got rid of it after the first year. And I asked around. I said, well, what's the easiest major to graduate? Okay, knowing that my study skills weren't that great for my years of college. So someone told me sociology. So I said, okay, that sounds good. So I became a sociology major, no problems, graduated on time, no issues. Except when I graduated, I said, okay, now I graduated, I'm a sociology major. What do you do when you're a sociology major? You surely don't want to be a social worker. Not to put down social workers, they provide a very important service, but that wasn't for me. So I knew a couple of things. I wanted to be a stockbroker. I wanted to be in sales. And that was hard also because that was 1970, bad market. And so I couldn't get into a really good firm. So I got into one of these small, sort of penny stock type of firms located in Fort Lee, New Jersey. I moved back into my parents' house in Paramus and worked there for a while.
Howard,
And
I'm sorry, what made you want to be a stockbroker at that time in the middle of this bad market?
I wanted to do sales. I thought I'd be good at sales. I had a lot of friends. I knew a lot of people, even from college. And I thought it would just be an opportunity. It's like being in the real estate business, right? The sky's the limit. Just depends how much you want to work.
Right.
And also in a lot of these sales jobs, I knew intelligence is good. It's important. But more important is work ethic. There are a lot. If you have great work ethic, you can make money in a sales position. So stayed at the small firm a little bit, then went to a bigger firm, then to another bigger firm, and then to another one. So I probably went to 4 different places. Ended up at Merrill Lynch in my last year in business. So that was good. An interesting firm because in those days, Merrill Lynch, you really got a salary and then you got a small lot commission. And it was funny because my view of Merrill in those days was as long as you wore a suit and tie and were on the phone all day calling prospects, they liked you. Didn't matter if you were doing business or not. So I went there. So I was doing both. I was working pretty hard and doing business. And then the market was just, still terrible. So I left in the end of 74, beginning of 75, and decided that the insurance business, the life insurance business predominantly was a good place to go. And one of the reasons was because being a stockbroker in bad markets is the worst time of the year was April 15th, because when your customer would get all his work from the accountant with all his profits and losses to file his tax returns. I got a lot of phone calls would be like, oh, I lost X amount, whatever number they said. And I didn't know what to say. What could I say? I'm sorry. Couldn't give it back to them. We lost the money. It was a lousy market.
Right.
But I also learned something during that time. In bad times in the sales business, a new person coming in can open a lot of accounts. I opened so many accounts because everyone I called hated their broker that they had because he lost the money. And I was new in the business, so I couldn't have lost the money yet in those days. So now, I'm in the insurance business. I had a lot of customers from the brokerage business, and I started building the business, and it was sort of the same thing. The one beauty of the insurance business is no one hates you when, especially the family, if you sell life insurance to someone in the family and they pass away, they don't hate you. No one ever calls and says, I lost money when I bought an insurance company. They thank
Right.
you. They thank you. So it was a very rewarding business. And then I started doing some more corporate insurance type of stuff, for big companies and pension plans and, all those things, that Keogh plans in those days.
Right.
So it was very interesting. And I did that for a while and built up the pension part of the business. And then I had an opportunity to sell it to a public company that owns an insurance company. Actually, it was the old publishing company, Harcourt, Braces, and Jovanovich,
Uh-huh.
which also at the time owned the SeaWorld.
Oh, wow.
Yeah. But they were mostly in the Scholastic publishing company. And so I sold the business. I was in it at that time with my father-in-law, who was a CPA and a college professor. Coincidentally, he was a college professor at Post. He taught accounting.
Wow.
The good news for me and him is I never took an accounting course in college, so I didn't have any issues. So sold it, but was still running it for a while. Lost interest after a little while, but had a good experience in that the fact that there were so many reports I had to give to the public company. So many, like weekly, monthly, everything was a report. Everything was projections and so forth. But I hated it. But then I started realizing after about 6 months, I was doing more business than I ever did before.
Wow.
I was part with them because I became more into running the business because I had the numbers in front of me. I had information. And when you think about it, pretty hard to run a business without information. And
Sure.
salespeople, a lot of times, don't look at it as a business. They just look at it as a sales job. So I went from selling life insurance and pension plans to really running a business. And all the things that they made me do helped me be a better businessman. So ultimately, during the time after I sold it, I got a little bored though after a few years, and I started looking around to buy some other companies. And some people came to me from the neighborhood I lived in. I was living in Long Island at the time, South Shore of Long Island. And
So you were finally able to move out of your parents' basement.
Yeah, I was out of there a long time already. When I got married, I lived in an apartment building in Long Island, then moved to a house, then moved into another house. I think by the time these people came to me, I was on my maybe second or third house, which I stayed in for a long time. So they had a deal to buy Nathan's, the hot dog company, and they were having trouble raising the money. So they came to me, and I had some ideas on how to raise the money. And so I helped them put the deal together, and we bought Nathan's. It was public. We took it private. And Nathan's was also another one of those companies. It was a great name, Nathan's. The name was so much bigger than the company really was. But the management was, the family that had owned it for a long time that didn't really expand it. They had a good business. They made money, but they didn't really expand it the way I thought it should be expanded. So it was right up my alley. So as soon as we bought it, we started franchising and doing license agreements and doing other things. And it did very well. It was private because we took it private. But then after buying it, I think we bought it in 87, took it public again in 92. The stock did nothing for a number of years. And then after some of the fruits of our labor in growing the company on the franchise side and on the licensing side, the stock took off, and it went on a run from about $3 or $4 to over 100.
Wow!
And so it was a big success.
Sure.
And during that time, by the way, I was still doing some of the insurance, business and so forth, because that I wasn't running Nathan's really. I was one of the lead investors in it, but I wasn't running it. And then ultimately, I ended up back in being the chairman of it and picking a new management team and so forth, because they floundered at a point, and so tried to straighten that out, and we did a pretty good job. And that's when the stock started, taking the run. And also along the way, being in sales business, you have the opportunity to meet so many different people. And a lot of my business, especially from the insurance business, was getting introductions from accountants, especially on the pension side, because you could show them how to buy life insurance with tax deductible money instead of after tax money. And so I was friendly with a lot of them, and I had a great relationship with them. So it was a great way to do other things. I had this group of people, and it was a great way to do other things. And one of the people I met along the way was someone that I've worked with for many years now, Bennett LeBeau. Bennett was a genius. He was a computer geek when there weren't many computer geeks around.
Huh.
He was a civilian in the Army. He ran the computers, and he was really the one that everyone went to, whether it was the Pentagon or any place else, to help him with the computers and stuff like that. And then he went to business himself afterwards and did a couple of deals that he bought. He bought it was one of those shop-at-home jewelry companies. I'm trying to remember the name of it. He bought an ice cream company. He bought a computer company, which was pretty big, called MAI Basic 4. They were around for quite a while. And he also had bought control of the old Western Union Telegraph Company.
Sure.
And Western Union was interesting because what happened in Western Union, it basically was going out of business because everyone went to fax machines.
Right.
So he came up, but there was a big network of Western Union offices, right?
Yeah.
Because people would, do telegraphs there and everything. And then he decided, let's go into the money transfer business. So they had gone into the money transfer business. And that was a phenomenal idea, great business. And, people would go into Western Union office, send money. It was called, in those days, it was sort of like the bank for the people that were unbankable.
Right.
So, a lot of money was going to all different places out of the country, and so forth.
Yeah.
And it had a lot of debt. The problem was it had a lot of very high interest debt at the time. So we had to take it through a bankruptcy, which we did. And during that period of time, it's harder today. The bankruptcy rules are different, but we were able to keep it in bankruptcy for a number of years. So the company, the money transfer business, took off. And then we ended up with a sale of the company in bankruptcy court to the highest bidder. And
wow. So you took it through bankruptcy.
Yeah.
Let me just get this straight. You took it through bankruptcy specifically to get rid of the high interest debt, to make it a more efficient business and more profitable. And then you're going through the bankruptcy process. And then in that process is when you found this other opportunity.
So we really didn't get rid of the high yield debt. The only time we got rid of it, but the bankruptcy allowed us to operate during that time and not pay the interest, right? So what happened during that time is the money transfer business became so
lucrative.
It was strong. Yeah, it was so strong. And there weren't many in it at the time. And they were the predominant company in it. So it took off, and we actually ended up selling in bankruptcy court. We sold the Western Union, the money transfer business, for I think it was $1.3 billion, which allowed us to pay off all that high price debt, plus all the interest, plus all the interest on interest, and still leave about $300 to $400 million over in the shell that Ben LeBeau controlled.
That's great.
So it was a great experience for me. And then after that, he said, well, why don't you, come and work with me full time? And, I was sort of advising him, and, he was paying me as a consultant for a while I was doing other things. And I really hadn't worked for anyone. So I said, well, yeah, okay. But Ben, he goes, look, I'll be the chief executive officer. You be the chief operating officer. So I said to him, but Ben, all we have is money. We have nothing to operate. He goes, well, then you can't screw it up. I said, you're right. So I went there, and then we started buying companies again. And one of them we just sold. One of them was the old Ladenburg Thalman. It was a broker dealer.
Yep.
Pretty ended up being pretty big. And by the way, to speak of timing, we sold it on the Friday before the whole thing came out about the pandemic. Not that we knew anything. If we didn't, we would have gotten 70% less for the company. We wouldn't have sold it. But
70% less.
Yeah. Who knows if we ever would have been able to last this long in that business. Yeah. So we did that. And then.
So I'm sorry, Howard. The Ladenburg sale closed the Friday before the pandemic broke out. So was that March 6th, or was it
Yeah,
more
just
like?
about. I forgot the date, but it was the Friday. Yes,
But it
or
was
maybe it was.
earlier in March. Earlier in
Yes, it
March.
was the middle of March. Exactly correct.
Uh-huh.
Exactly correct. And we were pushing to get it done, not because we knew anything about a pandemic, of course. We just wanted to get it done.
Sure.
Because we once had one other deal where the buyer blew up before we were able to, do the deal.
Well,
So
we're
we
hearing
wanted
that
to get it
we're
done.
hearing about that a lot, right? There was,
Yeah,
I know
exactly. Today,
Reality is
especially.
Reality is struggling with the sale of their relocation company. What is it, Cardis, I think?
Yeah,
They had a deal to sell the relocation company, and they were supposed to be closing, and the buyer is now trying to get
buyer's
out of
backing
it
out.
because of
Yeah,
the pandemic. And of course,
yeah,
my feeling on that, whether it's a corporate acquisition or whether it's an individual resale transaction, putting it more on the terms of my experience when people try to get out of things, they're walking away from their deposit for a degree of certainty. But if you can sort of elevate yourself and get on the other side of it, whether it be 12, 24 months, beyond, the current state of affairs, you'll realize that you shouldn't walk away. And in fact, the
right.
other day we were talking with our friend Leonard Steinberg, and Leonard said that the two greatest purchases he's ever made in real estate have been those that he signed a contract on just before events like September 11th and Lehman
Right.
Brothers, and he didn't try to renegotiate. He didn't walk
Sure.
away from his deposits. Instead, as he moved forward with the transaction, knowing that he wasn't doing it just to resell it in a day or 6 months, but he was doing it in such a
Yeah,
way that
long term.
he was going to use it. So as long as
Sure.
you
Yeah.
have your eye on the long term, then you'll be better off.
100%.
Yeah.
100%.
So
I think someone was talking, a pretty smart guy. I think I saw it on CNBC, that the most money he ever made was buying stocks before something bad happened and then just sticking with them. Because every time after there was a bad event and the market was down for a while, whether it was a few years or what, they took off afterwards. So he ended up, all his best investments were bought at times when everyone would have thought they would have been the worst investments. So that does happen.
yeah, I mean that's right. If we just look at Jeff Bezos and Amazon, right? Amazon was probably somewhere around $200 a share before the .com collapse, and then I think it came all the way back down to maybe $10. But if you had bought it
Right.
at 200 and not sold it at 10, but bought it because you liked the company and the model, and for the long term, I mean Warren Buffett said it best: when you buy a stock, don't buy it just to trade it tomorrow or sell it in a week. Buy it because you like the company, and buy it with a time horizon of 5 years or
Yeah.
more. And that's what I always tell
Yeah.
people with homes. When you're buying a home, don't buy it with the idea that you're going to sell it when there's panic in the streets, but buy it because you want to live in it with yourself, your family, whatever your situation is. And 5 or more years, you're going to be able to at least break even, and you'll probably be able to make a handsome profit.
Yeah, that's why I call real estate, as opposed to securities. I call real estate a more comfortable asset to own. First of all, look, when you own stocks, you can look every minute, every second. You can know how much you're losing or how much you're making. Okay, and that brings the emotions into it. And by the way, I am the same way. I will tell you that almost near the bottom, I sold some stocks because I was panicked. Okay. The good
Sure.
news is you couldn't sell your real estate even if you wanted to. You can't do it that. You can't price it that quick. You don't know if it's up or down, and you can't sell it that quick. So it stops you from doing things that you can do when it comes to the market. And I think that's why for most people, they end up doing well on their real estate. I think it's as simple as that.
Yeah, no, absolutely. Howard, with all these, corporate acquisitions that you got into after, the life insurance business, and meeting Ben, of course, were there any companies that you wish you had bought that maybe passed on?
Oh, I'm sure I passed on some winners along the way. I'm not. See, the biggest winners, Josh, as you know, the biggest winners were the startups, right? Someone has a
Sure.
great idea, especially in technology. I'm terrible with a startup. I couldn't start up anything. I just it's not my mindset. It's just
Right.
not my mindset. I'm lucky I can start my car in the morning. I just don't. It's just not. It just I can't do it. And again, technology is beyond me in most cases. Okay, so things that I've stuck with were companies. I also did a couple of other deals where I found a small conglomerate that was public, bought it, liquidated, figuring the pieces were were more separately, which they were. So, all those type of things I can do. Troubled companies, not troubled, but someone comes to me with startup, deals. I don't think I've ever invested in them. Just,
Yeah.
my mind's not there.
Well, the revenue is not there, so it's a little bit more difficult to, not only understand the inner workings of the company and its model, but where is it going? And it's a little bit of a crapshoot for someone who isn't in that space. That's why there are private equity companies like Kleiner Perkins and various others, out in Silicon Valley that focus on startups. So they know the winners, they know the people who do it, and they can understand the model a little bit better. Everybody has their focus. Yours is a little bit more in intangible assets, I think.
Yeah, I mean, I think more like the guys that run these big private equity funds think. They're buying companies that they think they can make better. They're not investing in startups, but you have the other ones, the Kleiner Perkins you mentioned. They're the ones that do the startups. So there's something for everyone.
Yeah, 100%. With Berkshire Hathaway's entrance into the real estate market on a national level, and SoftBank putting their muscle behind Compass, where do you see innovations as far as growth of the brokerage industry going in the next, say, 6, 12, 24 months?
Well, look, I think the brokerage growth will. You could be down a little bit depending on volume, but I think it's obviously people are going to use brokers. We've heard all this for years already, saying, "Oh, you don't need a broker. You can pay $500. We'll sell your house. You can do this. You can do that." Or the 1%ers, whatever. If they want to talk to smart people, and smart people generally want to speak with smart people, they're gonna use brokers. The brokers people that we know, the real brokers. Okay. And so I think that's here to stay. I'm not saying that some of these other companies can't succeed in the middle of the country in certain small places and towns and so forth, but in the major markets, we're here to stay and grow. And my guess is what's going to happen, the pandemic, what that's going to do is that's going to leave you with less brokers and less brokerage companies. And it'll be obviously the smaller companies that are gone and the brokers that weren't as experienced or just couldn't make it in something that may be tougher. But I think for the experienced brokers and the good firms that are out there, I think that we will all do better after going through. Look, we're going to this year. Let's face it. If you're going to look at calendar 2020, none of us are going to do as much business as we did last year. In fact, I think most of the people that I've spoken to, they believe the business. I'm talking about the city. Okay, the city may be as low as 50% compared to the numbers last year.
You're talking about volume overall. Yeah.
Volume. I'm talking about volume. Yes, volume. Who knows?
Right.
But after that, they're expecting 2021 to be a blowout, big year, which I agree.
Yeah, well, you've heard the saying of a black swan event, right?
Yeah.
And so, we really haven't had a true black swan event in 12 years when you think about it, right?
True.
Since 2008 in the financial crisis, 2012, the closest thing we had to a black swan event was Hurricane Sandy, where, the Northeast was impacted and we were, offline for, a couple of weeks, depending on where you were regionally. But, everybody was forecasting some event to happen. And, people have been forecasting a recession, since the last one ended. But what we saw in 2020 was not just a singular black swan event, but what's getting less coverage and only more so recently because oil for the first time ever went negative. But you had the pandemic thanks to COVID-19 and the coronavirus. But then you also had Russia and Saudi Arabia feuding over oil supply. And Trump finally had to intervene and we worked it out. No thanks to Mexico. But then we also have this third black swan event in the form of the national presidential election coming up in November. So I personally was thinking that was going to be the straw that broke the camel, or the straw that breaks the camel's back, as far as recession is concerned. So we have this almost camel-like year in 2020 with the pandemic, We get out of the pandemic, we go through the summer, and then all of a sudden people start to focus on the election again. So just when people are going to be starting to come out and commit to buying, you're going to see uncertainty crop up again in the fall. Not to mention, that a lot of people in medicine are forecasting a second surge in the fall with the virus. Right. So that, coupled with the election, is likely to make the fourth quarter a little bit more difficult.
Yeah, I agree. It probably will. I mean, look, I think on the good side of that is that, they are saying that there's 3 different companies that are close to vaccines that should work. We don't know if they do yet, but I don't know if we know enough about what it really is, the virus, that they could even tell yet whether it'll work or not. But look, they're going to find it. We may have a little bit more. We may have another rough time going into next flu season, but hopefully not. But I think I think it's going to take a while for people to feel, the habits have changed. This is why I think single family houses are going to be so important. In fact, which brings me to a point. I think the best market to be in today as a broker is working on selling and buying townhouses, because I think that people realize that these big fancy buildings, which are beautiful, I live in one of them, but the first thing that happens is they close the gym, then they close the sauna, then they close the restaurant. If you're looking at
all the amenities,
everything. And so what do you have? I say to myself now, I would have been better off in a house in the city, which I never wanted before, because you got 5 floors, you have your gym in the basement, you have your own things. You don't have to see anyone if you don't want. You don't have to walk through a desk. You don't have to go into an elevator with 4 other people. It's sort of interesting. And the reason I bring it up is because they have been the worst performing residential real estate in the market for many years now.
The townhouses, you're saying?
Townhouses, yeah.
Yeah. So there are opportunities out there as far as townhouses are concerned. But you're right. I just spoke to someone yesterday who was thinking about selling their townhouse, and now they're saying, hey, you know what? We were going to sell the townhouse and we were going to get an apartment in the city because we weren't using all that space. But if we lived in an apartment, then we'd have to ride the elevator with people. Right. We'd have to deal with the amenities, the hallways are coming and going. And, I actually like the idea of being in my house. So you're right. There's likely to be a renewed interest in townhouses. That said, a lot of people are also thinking about moving to the suburbs. And what do you think about the idea of, there being an increase in activity of people just, throwing their, towel in the ring and saying, you know what, I'm out. It's time to go, with my wife and 2 kids and get our, house and garage and a yard. And what do you think about that idea?
Look, you've always had that in the past, but it hasn't happened in the more recent past. And that you can tell by the price declines in the suburbs around New York City. The prices in the suburbs has not recovered from the pre-financial crisis crash. It just hasn't. I mean, houses in parts of Long Island and Westchester, where I am right now, those houses in Greenwich, Connecticut, those houses are down 50 to 60% from their peak, which let's say was in 2006. And there's lots of reasons, but taxes and real estate taxes and other things. But those houses look extraordinarily cheap, which means there will be some, and I've said for a while, even before the pandemic, that it's almost compelling now for some of these people to move to the suburbs. But that's some. And there are situations where people can't. If you have both parents working in New York City, there's no way they can move to the suburbs. Just not going to happen. If one works, you can make it work. So it'll happen to some degree, but that doesn't mean there's going to be a mass exodus from the city into the suburbs, And by the way, some people may skip the city a little bit now, when they graduate college or when they get the first good job, whatever, and they may go right to the suburbs if they grew up there and they liked it. I loved the suburbs when I was there, but I will admit to you, at some point after my kids were grown and out of the house and everything, it was sort of boring to me.
Yeah.
As opposed to the city. That was the only reason I moved.
Absolutely. And, a lot of people that I've spoken to, in these sort of earlier stages of, family development, let's say a couple gets married and they think they want to start having kids in the next couple of years. Well, God bless, they can certainly do that. But to move to the suburbs before you have kids is not necessarily going to be the most productive thing for your lifestyle or your career. If you have kids, sure, you might think that moving to the suburbs is the right choice, but you should really practice commuting. Are you thinking about moving to Greenwich? Well, take the train up to Greenwich one night, have dinner at 6-7 o'clock, understand what that's about. Do you see yourself doing that on a daily basis? Understanding the schools, understanding what it is like to drive. A lot of people who live in the city don't drive. I know a lot of people who grew up in urban environments, whether it's Manhattan or another city in the world, and they're literally learning to drive at 35, 40 years old because they're thinking about moving to the suburbs. So there are a lot of these things that people don't consider before they actually commit to doing them.
Sure.
It's a good idea to rent. Sometimes people are thinking about buying second homes up in the Hudson Valley, or I spoke to somebody yesterday who's thinking about doing the same thing in New Canaan, Connecticut. Rent for the season first before you commit to buying in these communities, so you can understand the nuances, the coming and going, and just the fabric of the community. So, Howard, just in terms of our local market, as we wrap up here over the next few months, where do you see activity going? Say, June, and then September, and then the end of the year.
Well, look, I'm basing that. I think that we will be able to start showing. I'm just guessing by looking at the guideline stuff around the middle of June. Could be as early as June 1st, but I don't think so. I think it'll be June 15th. Could be a little later, but who knows? I think there will be somewhat of an immediate rush to people that wanted to do something, couldn't do it before, and also thinking they're going to get a great price. And that may be true in certain circumstances. So someone that wants to get out of the city. So I think we'll be pretty busy. And I think when it'll really start getting busy, it'll be September. I think people are going to take it easy during the summer, see what's going on, start looking, we'll start showing. And I think September, I think, through the end of the year should be pretty good. Again, unless we get an attack again. Hopefully not. We all pray that we don't.
Yeah, I mean, look, we don't know whether we're going to see a second surge in infection rates or not. People are saying that is likely, but by then, we'll know how to deal with it. We'll be taking precautions. Look, everybody in the city is wearing masks when they're doing something as simple as just walking down the street. People are wearing gloves. So we'll carry that through into our protocols with showings. But I'm confident, and I'm optimistic. I'm probably on the more optimistic side of things than most, but I think that New York is going to bounce back. I don't think it's going to be an overnight sensation, but I think you get, like you said, September onward, 6 to 12 months back, and New York City is a very elastic city. It's very resilient, and let's face it, we're New York strong.
Yep, 100%. And look, it's hard to be in any business, but especially this business, if you're not optimistic. So we have to be optimistic, and we'll see it go. We'll see it go up. We've seen it go down. We've seen it go up before. We'll get past this without question.
Absolutely. Well, Howard Lorber, Executive Chairman of Douglas Elliman. Howard, thanks so much for taking the time out of your busy schedule to join us today.
Thank you, Josh. That's assuming I really have a busy schedule. It's not quite as busy these days. But thank you. Thank you for having me. Pleasure.
My pleasure. Thanks.
All right.